enable.
Hello and welcome to a brand new edition of the Financial Advisor Forum 2016-17, brought to you by UTI Mutual Fund and CNBC TV 18. This time we're in the city of Pune, also known as the Oxford of the East.
The Financial Advisor Forum 2016-2017, presented by UTI Mutual Fund in partnership with CNBC TV 18, reaches out to independent financial advisors across the country. And this time, the forum travels to Pune to discuss and strategize how financial advisors can scale up their business, reach out to millennial investors, and embrace technology to serve their customers effectively. The mega theme for this forum is Unexpected is the New Reality. Financial experts and industry leaders discuss the mega trends and market themes and share their insights with the independent financial advisors in an engaging and interactive session. The forum experts are Leo Puri, Managing Director, UTI Asset Management Company Limited; Prateek Bhobe, Senior General Manager, ICICI Bank; Praveen Bhalerao, Senior Managing Partner, IIFL Wealth Management; Prasad Pradhan, Sajag Securities.
Let me open this up with some broad thoughts on how the panel interprets this concept of volatility, this new normal, so to speak. Mr. Puri, sir, if I could start with you.
No, as you say, there's been a lot of developments, but in a way, what those developments are doing is they're adding clarity rather than ambiguity, because we now know where things stand. A year or so ago, we were not sure. Would Brexit happen? Would Trump come into power? Would Modi win the UP elections? And I actually take the view that what's happened has been a very clarifying year, because whether you like or dislike the outcomes, we have the outcomes. So I actually think we are much clearer about where we stand today and about where the world is. So today you have a world where, yes, there is going to be a tremendous process of change underway in the Western world towards a more closed economy and movement away from globalization. We know that's likely to happen. You are going to have a period in India where the NDA government is going to consolidate its hold. Whether you like that, don't like that, we know that's going to happen. So there's more certainty in today's world. Liking or disliking the outcomes is a whole separate issue from understanding them. And I think that's the way that I look at the world, is that it's a much easier world to understand today than it was a year ago from my perspective.
Well, wonderful. That's an interesting take. Praveen, let's get your thoughts in.
Yeah, of course. Asset class-wise, there are going to be certain uncertainties, like we are talking about gold. It's moving either direction. Oil has surprised us, went to 56, back to 40, 48 now. So all that will keep happening, and we don't have to forget that we are completely globalized. So events happening even outside of India will have a lot of bearing on our markets at times. So, but as Mr. Puri said, things are much better than they were 6 months ago. Mm-hmm. So I think there's much good clarity. We are all fortunate to be part of this growth story, I can say, and long-term story of India is still intact.
Okay, Pradeep, initial thoughts.
It's just that in the context of wealth creation, I think what matters, and I'm sure all the gentlemen here would endorse that, is that what matters is the discipline which a financial advisor brings to the table with respect to the customer. And that's what I think really matters. To that extent, it's about separating the noise from what is material and really helping the investors. To that extent, I don't think there is anything which is unexpected which really should matter to investors.
Okay, so managing stability even when there are unexpected events. Ganesh, your thoughts? Given that a lot of the events, so to speak, are behind us, does it mean less volatility?
Uncertainty and volatility is actually part of all asset classes movement actually, and we had seen in past also, if we when Sensex was around 1000 in 1990, and today somewhere we are near 29,000. After 27 years, we had seen almost a rise of 29 times in the Sensex, and in all this 27 years, we had always seen uncertainty in the markets. And we had seen government changing, political uncertainty, financial crisis, everything we had seen in the last 27 years. But still, people have earned good money in markets.
Okay, so let's get the wealth advisor's view on this as well. Pratik, you want to go first? And of course, it's an individual-to-individual risk assessment. But generally speaking, as you see the world around you, does the environment look benign, or do you see perhaps some risks that could create these bumps in the near future?
See, I think when one looks at it, there always are risks, right? I mean, I haven't seen a scenario which is completely risk-free. And I think as an advisor, what any good advisor would do is really establish with a customer about his appetite for risks before advising him on his investments. What also matters for any good advisor is, the staying power, because, often what happens is in times of volatility, and especially during the down cycles, it is very easy for the advisor to back out from that connect. And so far as this whole business is a very, very high touch business, right? I mean, the personal touch of each advisor with a customer matters. And to that extent, I think the ability of an advisor to really ride along with a customer in volatile times is what matters. I think, you create wealth by discipline, you create wealth by advising customers to stay true to what their expectation was and not really get carried away with, the exuberance. Very, very simply, an advisor is somebody who would stand between, a customer and, irrationality. I mean, an advisor has to really stand between a customer and his irrationality, which happens to all of us when we look at either extremes of the market. It happens during the worst of the markets and it happens during the best times of the market. And I think a good advisor really would sort of get the customer back to his asset allocation as would have been agreed at that time. And I think that's really the crux of it.
As an advisor, what would you tell your clients right now? Yes, it's been a great ride. If people have made money, that's a great thing. What is it that people should be aware of?
Basically, there is an underlying risk, no doubt, in any asset class. People have to understand that. And many times we see that the client doesn't show all his total wealth to any financial advisor, and he shows some part of that. And he hides so many things. He is having real estate investment and all that, but he doesn't show that. So I really don't understand many times that how much portion he is investing through us and how much he is investing through these different asset classes. So that is always a tricky situation for all of us. And equity allocation is always very low. We had seen for so many years. And right now it is increasing because SIPs and all these things. But still I feel equity allocation in individuals asset class is comparatively very less.
Praveen, to get your thoughts on this issue.
But when you look at clients' portfolio, I think we will have to look at the long term always, and we stick to asset allocation. Don't deviate. I'm not saying don't listen to too many channels, but definitely not getting carried away with the short term volatility in the market. I think we are in the sweet spot. Just to highlight, like you see, the currency has not moved. Actually, we have the other way problem of RBI asking banks to buy dollars. Okay, so in this volatility, we have lower interest rates, very stable currency, a firm government which can run the mandate, and interest rates first time bankers have passed on to the customer. So I don't think we'll have such a nice situation. It's virtually we are in sweet spot. So I still believe we are short term we may be overvalued at this stage, but generally on debt and equity, I think you stick to asset class always and not get carried away with this kind of a global events even for that matter.
Mr. Puri, of late I've heard a lot of people talk about the concept of dynamic asset allocation that sort of lets you move between debt and equity, particularly when one particular market reaches its all-time high. Are you a believer in that sort of philosophy?
Well, it's the concept of dynamic asset allocation is one that attempts to offer a product where the asset allocation process is embedded in the product. And there are two ways to look at that. One, of course, your financial advisor could undertake that task for you, in which case you're better off aggregating specific products as per your choice, and your advisor could help you do that, and that's a perfectly good solution. On the other hand, there may be some people who either don't have very substantial sums or who don't have the aptitude or inclination or interest, who are quite happy to say, I just want to write one check, and I'm quite happy to have somebody manage that for me. There are pros and cons, as I said. I mean, but it's a useful product to have available. I think it adds to the choice, provided people understand what they're buying. When you buy a dynamic asset allocation product, you are still buying a particular strategy. You're still buying a view of the market. You're not buying something that is godlike and neutral. Because if I'm a fund manager running a dynamic asset allocation product, I'm human and I still have to actually run a view on the market based on a consistent strategy. Your financial advisor, on the other hand, who's aggregating products for you, can always be more flexible because they can decide and customize for different individuals different strategies and put it together. So both can work well. You know, I think they just have to be, it just needs to be clearly understood which is a better way of actually beginning to get diversification and management of risk, which is what both are intended to do. But I think it's been a useful contribution to the product portfolio for many people to have a product of that kind.
Okay. Mr. Puri, speaking of flows, I mean, 2016 was a phenomenal year. The way in which domestic institutions came in, mutual funds came in, supported the market, and we had a very steady flow come through. Has something really changed? Are you expecting more retail participation? What are tier 2, tier 3 cities telling you?
Yeah, actually, of course, it's the investors who support the market. Yeah. We're merely a pass-through instrument for that. So I think it has been remarkable as to how much faith domestic investors, both HNI and retail actually as regards equity markets, both have participated. And I think that's been a function partly of a new level of discipline. I think Ganesh mentioned the SIPs and so on, which we have helped create that. It's been a new level of confidence in the sustainability of the reform process and the quality of the administration that people believe the country is running under. And I think it's also been based on a level of the alternative opportunities being less attractive. So some of what we've seen, so it's a combination of these three things. A little more discipline, more faith in the government and reform, and poorer opportunities, which has helped our industry at this point.
And wondering whether a lot of this money that's come and parked itself in bank accounts, whether the sense is that has a lot of it moved, has a part of it moved, sort of when you interact with clients, what do people tell you?
Just put things here, put the numbers there. The B15 city, which is called, I've seen about 44% growth last year. About 3 lakh crore, if I'm not mistaken, is the mutual fund assets coming from B15 cities. Besides that, you see now 4,000 crores of SIP money coming every month to the market. We'll have about 12 billion soon in a year by just SIPs. I think post demonetization, I think there is a complete, we can say the loss of interest in other asset classes, maybe gold and real estate. A lot of force being diverted to financial savings. That I think is the major reason for flows moving to equity. This is going to improve. Again, I'd like to give credit to some robo-advisory who are able to reach masses, which was not there till last year, I believe. So reaching out to customer to last destination, we are there just in B15 cities, but I think we are not moved beyond that. Just mutual fund assets are just 4% of total market cap. So we are nowhere there. I think we have not even scratched the surface. So a lot of money will follow. I think it's just the beginning, according to me.
Ganesh, your thoughts on the way you mentioned the point that people are not entirely transparent. I get that. But what sort of feedback have you heard from clients since the 8th of November?
Basically, this market is a regulated market. So actually demonetization, as Praveen said, actually money came in system. And because of that, more flows are coming towards actually equity or mutual funds. So that thing is definitely happening, and thanks to interest rates, they are falling. So people are finding different choices to get better returns, because we always say you have to beat the inflation. And people understand that if they invest in fixed deposit, they cannot have the same lifestyle. So for that, they have to invest in some risk asset class also.
Okay. Ganesh, your thoughts on sort of Pune specific trends and sort of questions that come up when people are talking about products?
Earlier, Pune was a pensioner city. Now it is no more a pensioner city. We see a lot of young crowd because of IT and all. But they are spending a lot on their housing and two-wheelers or four-wheelers. So we said it's a spending and saving economy, Pune. And there is a big manufacturing hub in Pune. And we have seen, no doubt people are conservative, but still equity cult is there, because there are so many good companies in Pune, like Bajaj Auto, Telco and all. And people have invested in those companies and people got good returns from them. So some part they are ready to invest in equity also.
Pratit, your thoughts on this whole youth engagement and catching people young?
The role of digital, because I think this whole digital economy that we're witnessing, as you're aware, is really more witnessed by the age bracket of 20 to 30 to 35. And now if you look at roles of, be it banks or standalone digital companies, I think almost everybody is talking of, saving and investment products, no matter what they cater to. I mean, even the large e-tailers, for that matter, are today talking of distributing mutual funds, right? So I think it's a matter of time before you find this whole youth segment, thanks to this thrust on digital, having a large part of their earning hopefully diverted to a saving before they get down to spending.
So now let's get your thoughts on this whole digital piece and whether apps are working, and because there's a lot of experimentation that's going on. What is your sense on this whole digital play?
So the most successful digital strategies are going to be those which provide the same level of experience in terms of seamlessness, in terms of the sense of controllability, and the youth is very big on controllability, in terms of the brevity, because people have much less, the attention span, for better or worse, is shorter than it used to be. So those features need to be central to the way you present yourself. And that's why I call it an adaptive strategy. And I don't mean that to undermine the strategies, but the best strategies that we will use will ultimately be adaptive to the digital ecosystem already created, acknowledging the expectations that already exist and catering to them as smartly as you can.
So Pratit, join the dots for us then when it comes to technology. For an IFA, what does he or she need to do to make sure that he's not completely missing the tech buzz? Because as Mr. Puri also mentioned, transactions are happening. So there are different apps and different platforms for transaction. There's a lot of information that's flowing through different sort of information apps or news apps, if that's what you like to call it. So does every IFA also need an app of his or her own? I mean, how do you be on the bus and yet not spend too much of energy and time to sort of diffuse your overall effort?
I think we look at this whole digitization in two respects. One is, of course, what they spoke about in terms of it being incremental service platform. It's basically the movement that we've seen from paper to paperless, right? And which is what digitization has sort of helped all this while. I think the other big thing which digital will do, and we have to see it evolve yet, is the ability to deliver mass customization. There is just so much data which is available, which talks of different behaviors. We've still not really seen the capitalization of data in order to ensure we are able to deliver mass level of customization to customers. And then it's not only about youth, because the behaviors which I will have will be very, very different probably from what somebody who's 25 years would do. But the ability, because of my data which exists, be it internally within the bank or be it in the external ecosystem, the digital footprint is permanent, make no mistake about that. So that data just stays. Now it's really the ability of these firms to make the best of that digital data in order to deliver the right product to the customer. I think that whole evolution, which is likely to happen over the next few years, will really be the transformational evolution. From an advisor perspective, one really has to start thinking about what this means for your business, because it's not only about developing an app and saying, okay, today I have an app and I have created the convenience and I've moved from paper to paperless. I don't think any of us should fool ourselves by thinking I'm digitized because I'm paperless, right? You got to be thinking about what is it that you're going to do with respect to the data that you have. And of course, different people will have different amounts of data. But I'm just saying you need to be cognizant about the fact that if you don't use the data in the ecosystem, there's somebody else who's going to do it better than you. And I think one just needs to sort of be aware of this change which is sort of upon us.
That's it from this Financial Advisor Forum here in Pune. We'll see you again in a different city with another distinguished panel of experts to explore new opportunities in financial planning. Thanks for watching.
Focus, ideate, innovate, enable.